Hello traders, Gary Wagner here just before 9:30 in Honolulu, 3:30 in New York on Thursday, the 14th day of May 2015, and this is the daily report for gold and silver. Although trading well off of the highs today, we do have the precious metals across the board trading higher today as we have equities markets moving back into record territory, dollar weaker, crude oil softening also. First to gold, as you can see, currently trading up about $3 on the day, 21.40 current print. That is with a low of 11.90 and a high of 12.2770. Silver also trading higher on the day, up about 20 cents, 17.43, the low 07 and the high 58.5. If you recall from yesterday's show, we talked about the upside surge that we saw and the fact that we were going right back to a resistance area. And depending on whether or not the market goes through that resistance area is really going to give us a strong indication of whether we'll see a sustained rally or continue to trade within the range. Now, as of this particular moment, we are currently just at and not closing really above that strong level of resistance. Markets currently trading 1221, 1222 in that area. We're starting by looking at a very short-term chart. 240 minutes or a 4-hour bar chart, Japanese average format. Absolutely, you can see that we have seen a waning in terms of the strength of this upside move as we got into the latter part of the trading session today. But nonetheless, we are trading up, and we're trading up about $3 on the day. When we look at a short-term chart, we can see that a case can be made for that upside breakout. And as I said yesterday, we're really waiting for the information to give us a technical confirmation of whether or not we'll see a sustained rally or trade within the range. And when we look at some of the other technical indicators for this short-term study, we can see that the moving average, convergence, divergence, MACD, they are definitely widening and they are definitely still in an upward movement. Momentum is strong. However, that changes when we take a look at a 720-minute chart. This is a half-a-day chart, standard candlestick format, and really what we're looking at within this chart is the one basic fib retracement that really illustrates this resistance area on a technical basis from here to here and then back up to here. That's our 50% mark. We can also see that we're closing well below that marker, not well below, but a couple of dollars below. And really the pattern that we're seeing is something that's called a scouting party. Now, a scouting party is a candlestick pattern that was really first identified by Steve Nissan. And really the pattern is, as a market goes and tests a resistance area, you'll come up and make this high above that resistance. That's a scouting party. And if in fact it's successful, in other words, if there's not too much resistance and prices are able to overcome this price point, he calls it a beachhead, and we start to see the market trade at and above this particular price point. Now, we're certainly not there yet, and we have to determine whether or not this price point can hold right in this area, because if it cannot, my sense is we'll see the market back off and actually move back into this territory. However, this critical area, as I said on yesterday's show, an effective close above this area really signals the potential for a sustained rally in gold. We are witnessing some interesting activity in the other markets that we are following right now. We're looking at crude oil. This, of course, is a weekly chart. We're going in towards the end of the week. We're back below $60 per barrel, 59.88. And you can see that the range between the open and close of this week is very, very narrow. Same as we had last week. We could absolutely be seeing some sort of topping action. But in terms of the upper level, if we do continue to see a rise, 68.53, that would be the absolute top. That is a 38% retracement from the fall itself, up above 110 to down around $41 per barrel. but we'll have to look because we are getting some indications of potential weakness after seeing this dramatic rise. I believe a 25% rise alone over the last month. Eurodollar, and you know we've been talking about this over the last couple of weeks. Eurodollar's at 114. Of course, dollar is weaker on the day, but you can see we've got some tremendous strength in the euro as we look at this daily chart, which brings us to our dollar chart. You can see, although we are trading off of the lows, we are at 93.42. And if you recall, we talked about a pretty significant level of support that we should see enter the market. That's where these lows came in at. And so the real question is, will we see the dollar after this tremendous climb and subsequent retracement? Will we see it move back up? Because if it breaks below this particular price point, the next real level that I see in terms of major support on a technical basis doesn't really come in till about 92. So we want to watch very closely to see how it reacts here. And of course, one of the most impressive moves that we've seen on the day has been in the equities markets. We're looking at the E-mini S&P 500. We're currently trading at a 2115, this being our daily chart. And as you can see, we've gotten very, very close to the highs. I believe on a closing basis, we are above any point that we have seen in this market. In other words, we do have a record close just by a couple of ticks, but nonetheless a record close. But the real significance right now is the fact that there is a perception now that we are not going to see interest rates raised as aggressively as originally anticipated over the last couple of weeks. And that, of course, is what's causing our dollar to go down, gold to move up, and the equities to rally here. Lastly, I want to take a look at silver. As you know, I've been more bullish on silver than I have been in quite some time. We've got this nice upward channel, and we have broken above that. More importantly, we have closed above that. This, of course, being our daily chart. And the key, as I said, is if we see gold on a closing basis sustain above that rally point, about 1223, I believe that we'll go into a protracted rally and not just a corrective wave to the overall downtrend that we have seen in the market when we look at it historically more long term. So traders, we're almost armed with the information necessary. We're right at that critical point. Depending on how gold reacts right in here will determine our next trade. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review along with the weekend review. Bye-bye.